Hello and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today, and my name is Trent. With me here today is my colleague Oliver, a senior dealer and marketing executive from Phillip Futures. How are you today, Oliver?
Hi, Trent. I'm doing great. How are you?
Good, good. Same to me also. Nice to have you here today. So for today's podcast, we'll be discussing on the topic gold prices is soaring or red hot inflation. So to our audiences out there who are currently trading or investing in gold or interested to invest in gold, do not miss out on this podcast. Once again, I would like the help of all our below audience to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. So without further ado, let's jump into our topic for today. Gold prices is soaring on red hot inflation. Gold prices have been underperforming as a safe haven assets in comparison to treasury yield in 2022. With inflation turning red hot lately, US Consumer Price Index was reported rose 7.5% year on year, which is the highest in the past 40 years. So with Federal Reserve keeping an eye on inflation numbers now, we will be discussing on how gold will perform in these turbulent times. So Oliver, what are the main factors causing inflation to rise rapidly?
Yeah, Trent. So gold has been an uptick recently. So the reason is all because of the inflation number. So we can say for the inflation, why has it been rising rapidly? It is because of the before of the COVID scenario. So before that, we have this COVID-19. The global supply went into a disruption. So Fed also are pumping a lot of money. They support the economy by giving trillions of dollars, and also the Fed also reduced the interest rate as well. So thanks to the vaccination, economic has now slowly recovering, and then you can see that a lot of country also start to ease a lockdown, except for China having a zero tolerate policy. And so for as in 2022, you can see that inflation is high. It means because of all the commodity prices are mainly high. This causes inflation to persist until this day. So you can see oil price is at a very high price. Shipping cost is so high. So all these are linked towards a higher supply issue here. And for the demand side, we also have the economic recovering. So therefore, demand is also increasing, lead to the inflation to become this high. Yeah.
Okay, yeah. Those events that you mentioned certainly have caused some volatilities in the gold market. So for our next question, do you think this inflation will prolong for a longer period? And how will the Feds combat this high inflation?
I'm not very sure about how high how this inflation will remain high, but I think in November, right, the Fed did retire the word transitory. So back then in 2020, the Fed was actually quite tolerant with this. They said they will continue to support the economic, but until in last year November, they have turned into hawkish, and then they say they'll retire this word transitory. That means that actually acknowledging this inflation may still persist for a while. So according to IMF, inflation may also continue surprise the upside, and also especially in the stronger economic. So as we mentioned at the beginning, the CPI number is actually very high, 7.5% in the latest one, and it is the highest in the 40 years. So we can see that how the Fed trying to combat this inflation, they are trying to ease their tightening their monetary policy. So Fed reaction in 2022 now is that they have already started to reduce their QE by actually reduction of treasury per shares and the mortgage backed securities. But now they will be starting to touch on the interest rate. So the latest one, they are aiming to actually reduce to hike their interest rate in March. Just that in the minutes, the recent minutes release, they didn't indicate like uh, how much of a rate hike they will actually issue in coming this Fed meeting. Yes.
Okay, so let's see how the inflation will turn out this year. So based on your opinion, what could be the potential impact of such Federal Reserve action on the gold market?
Yes. So as mentioned just now, Fed has actually been hawkish. So Fed being hawkish meaning to raise interest rate or to stop the QE. It is not a good sign for gold. So therefore, gold have been actually being pressured for a while in 2022 in comparison to the 10-year Treasury yield. So, but we do need to take note that market does price in expectation as well. So they have been listening to all the federal meeting and presidents, looking at how much looking for clues of how much the rate will be increasing. So far now, I think that the market is actually pricing at least a 25 basis point, but there was a lot of discussion on whether will be the Fed will be pricing 50 basis point. Yeah. So with inflation number like in the CPI come out recently, this put a lot of pressure on the Fed to actually react to this inflation. So we will still need to see how the Fed, because the Fed has also actually been quite scared when it comes to this increasing the interest rate too fast, like 2013, this temper tantrum. They are also scared that if they do it too fast, it also cause a shock to the market as well. So we do need to see how the Fed will play out, but this is so far what the market is expecting.
Okay, so let's see how the gold market will perform in the coming months. For our next question, traditionally, gold is inversely related to US Treasury yield, but currently the situation is both yield and gold is rising in tandem. Could you explain to our audience why is this phenomena and how can investors position themselves?
Yes, so both US Treasury yield and the gold are actually moving upward and uptake momentum. So to explain this, I can only say that gold is actually reacting to the inflation because inflation being that hot, gold is actually a safe haven asset. So people will use gold as a protection, as a hedge. But yield is also higher. You only can explain that currently because of the CPI number coming out is indicating the inflation rate high. Gold actually think that inflation is higher, but on the federal side, on how much they will actually increase the rate, like just like I said, they are actually not very sure. There's no clue in the minutes as well. So this becomes that the gold has actually moved upward. It moved more or maybe to catch up, starting to catch up with the treasury yield now.
Okay.
Yeah.
Yeah. So let's see. So gold is certainly showing a lot of bullish momentum at the moment. So for our last question, what other potential risks should investors look out for in the next few weeks?
Yeah, so far, if you can see, for the gold actually react a lot on the US data, especially the CPI number and the employment. Even though employment, you can see on the past few one, they're actually quite okay. The economy is doing strong. They have a lot of hiring as well. But other than that, I think for now, I think the market will actually look closely on the fact how will they react lah. So the Fed have ad meeting in 2022 lah. So far now we have after January meeting, now we have a 7 to go. So the latest one will be in March 15 and 16. So we will see how will the Fed react to this lah. And other than the Federal, which is the Federal Reserve, we also need to mention about this Russia and Ukraine conflict as well. So back in 2018 or 2019, when Trump is in his office, um, there was a lot of geopolitical tension, and this led to gold to rise a lot higher. So this Russia and Ukraine conflict may also add on into this fire as well. So even though it's unlikely that Russia will go into war, because it doesn't also make sense for them to do, because war is also costly as well. But if Russia in NATO and the US go into war, this also means that the oil prices will actually went higher. So in this case, will lead to inflation to move higher as well. So this make a lot of market to fear on this incident as well. So we also need to keep a close watch on this geopolitical tension. So to actually see how long will it actually last. So the longer it will last, it will actually benefit the gold price as well.
Yeah. So thank you for your sharing, and I hope what you have shared will be able to help our new investors out there. So to our audience who are interested to invest in gold, we are currently having a year-long promotion on CME Micro Gold, where clients are able to enjoy a super low brokerage rate of only USD 3 per lot. So for more details, you can actually drop us a message on Facebook and our representative will get back to you. And now we have come to an end for today's podcast. If you have any question or any topics you want us to discuss next week, you can message us in the comment box below. Thank you for listening to our podcast and happy trading for the week. Thank you for your time too, Oliver.
Okay.
Thank you. Bye.
Thank you. Bye.